Hi, everybody, and welcome back to our third video in Chapter 12. Now, we went through the details of how we calculated this $20,000 of operating activity cash increase. And if you'll remember, here's the $2,000 that we got from the sale of those plant assets. You'll remember that from here in our calculations of the third step of the investing activities. And then we also had cash received from investing in the stock. And then we paid to retire the notes of 18,000 and 14,000. You'll remember those numbers from here, cash paid to retire the notes, and the $14,000 here for the financing activities associated with the cash dividend. There she is there. So we can then say that for financing activities that represented a use of cash of 17,000, where cash was provided by or increased by $2,000 for investing activities. So we add these three beauties together and we get a net increase in cash of 5,000. We started at the beginning of the year with 12,000 on the balance sheet, and that should give us 17,000 in cash balance at the current year. And if you'll remember way back here, we said that our ending cash balance was 17,000. So that is the proof that we haven't made any mistakes in this calculation. All right. So we can go through all of this from a T account perspective from our cash. So here was our net income, our depreciation, all these adjustments. We got a net increase in cash of $5 or $5,000. And we had some credits and we had some debits. And so the information to prepare for the operating cash flows are our current assets and current liabilities. And then we have our investing and financing activities below this little dotted line here. And it shows the other areas, other classifications impact on cash. And I think that pretty well sums up a summary of what we just went through in detail. So hopefully you see that and how that all translates together. Fairly complex, but I think if you take it step by step, you'll be fine. Okay, so let's analyze the statement of cash flow and apply the cash flow on total assets ratio. So here, source and use of funds, we often say, managers review cash flows for business decisions. Very important. And I think as you get into chapter 24 in 1B, you'll see that that's in fact true. Creditors evaluate a company's ability to generate enough cash to pay their debts. Of course, so do banks. Whether you're personal or professional, you can bet that that's going to be the case. The investors assess cash flows before buying and selling stock. And so here, look at these three companies, BMX, ATV, and Trex, and you can see that they all increased cash by 15,000. But how did they do it? Well, BMX purchased some plant assets, but they had a big operating cash flow increase by 90,000, but they spent some money on some new plant assets and they repaid some debt. So that's what you like to see. You like to see operating activities really large. But ATV, somewhere in the middle. They had a pretty good operating activities and they did purchase some plant assets. So that looked pretty good. But Trex lost money in operating activities. That's their seed money. And they sold off some of their seed corn, if you want to say, for plant assets, and they issued some debt to pay for that. Okay. I think you can see which company you would prefer when you analyze these statement of cash flows. So, how do we calculate along with our income-based ratios, return on assets and that kind of thing? This is going to be cash flow on total assets. And what we look at here is just the cash flows from operating activities. And we divide that through by the average total assets. And by now you know how to take beginning total assets, ending total assets, and divide by 2 to get average total assets. Okay, so that is, I think, interesting. Now, here we're going to illustrate the use of Spreadsheet to prepare a statement of cash flows. I'm not going to spend a lot of time on this. You're welcome to do that. This is the same example that we just went through, except that it's a worksheet or a working paper or a spreadsheet, whatever you want to call it, and it shows the analysis of these changes and how that affects our um, um, ending cash balances. And then we're going to compute cash flows from operating activities using the direct method again. That this is a little trickier than you might think. So here we have our revenue and expenses. Those are going to be pluses or minuses. We're going to adjust that for related balance sheet accounts, and that will result in our cash receipts or payments, source and use of cash. All right, so here we have operating cash receipts. We get those from customers or people that rent our buildings. We get some interest revenue and get some dividends from stock that we might hold as a company. But we also pay our suppliers, employees, operations, interest, and taxes. And we net that all together to find out how much net cash we provided or used. And so here are some key things that you want to keep in mind when you're doing your homework here. So our receipts from sales, we're going to grab the sales revenue, but we're going to adjust that we're going to add a decrease in accounts receivable and subtract an increase in accounts receivable, just like we did with the indirect method a little bit here. Okay. Decrease in accounts receivable is a source of money. So we're going to add that. And then we can do the same thing with rent revenue. We use receivables here. Same principle, same thing with interest revenue, same thing with dividends revenue. Now, payments, in my mind, I always have to shift gears because an increase in inventory is going to increase that expense. So here's cost of goods sold. All of these are expenses. We're going to increase that with an increase in inventory. That means we used cash. So we'll increase the expense for that and decrease it for inventory. But we also include the other side of the balance sheet. A decrease in accounts payable is also going to increase your cost of goods sold, etc. And the same thing with prepaids. We have an increase in accrued liabilities, which are assumed to be prepaids in this example. Okay, and then we do the same thing for wages, same thing for interest expense, same thing for tax expense. We just use these accounts for that. So I think when you do the homework, this will be a little clearer, but be sure you break your textbook out for this one because it can get a little tricky. All right. That ends chapter 12. And when we come back, we'll take a look at chapter 13, which puts together a lot of what you've learned into how to analyze the number, not just be able to calculate the numbers. Um, I think chapter 13 will be very interesting for you and very useful for doing your projects. Until then, bye for now.